Ozprop actually started just after the global financial crisis when my partner and I were looking at diversifying our portfolio abroad. We looked at various countries. The traditional countries to look at that stage obviously were the UK, the US, and Europe. But we looked a little bit broader and found that Australia ticked most of our boxes. We had a very objective set of investment criteria. These for us included the fact that we wanted to be in an English speaking country. We wanted to be able to communicate directly with any professional, such as an attorney, an engineer, a quantity surveyor, and the like, and not rely on any translators. We were looking for a market which was fairly regulated, so as an absentee landlord, we felt comfortable. And we were also looking for a market whereby we understood the dynamics and the legal framework. Australia ticked all those boxes for us. My partner Jürgen von Saeters and I actually founded Ozprop at that stage. We started this venture as a private equity fund for real estate, whereby we had a number of co-investors that came in along us. And we, at that stage, did not have the intention to start a fund. What happened when we grew to a certain size is that due to all the regulations in Australia, which we enjoyed having, we found that we needed to get the required licenses to operate a unlisted real estate fund. We made a decision to do so. We obtained the ASIC licenses, and at that stage started to put together a team of professionals that could run the operation as a proper fund. And that is when Ozprop was born in its current format. The offices of Ozprop are located at Broadbeach, just south of Brisbane, in Queensland. We have been focusing on the Queensland state for most of our existence. The reason why we've done that is because we found that the yields that we can acquire property for within Queensland are slightly higher than those in most other states. Most investors tend to focus on Perth, Sydney, and Melbourne, whereas the same property in Queensland would actually give us a slightly higher yield. And this was attractive to us. One of the first asset classes within real estate that investors tend to look at is actually a residential unit or a residential property. This makes sense because for most people, it is an asset that they understand more, and it's something that they're familiar with because most people own their own houses. However, one needs to realize that the return on a property is a function of two factors. The first factor is the amount of rental that you will be getting in other words, your income stream. The second factor is the capital growth that will happen or that one hopes that will happen. What we typically find in residential is that the reliance is more on the capital growth that you will hopefully have than on the income stream, which is typically lower than in commercial. As such, you are relying on the growth of the asset, which is something that you cannot control yourself and is purely a function of market forces. With commercial and industrial, it's almost the other way around. The leases tend to be longer, so one can quantify the income stream of the properties during the holding period. Obviously, we also are hoping for a capital growth at the end of the investment horizon, but we are less reliant on that capital growth, so we can quantify the returns better. The one issue is that, on average, investment in commercial and industrial property is a bigger ticket size than, say, a residential unit or in any other residential property. The way we have overcome that is that by having a number of co-investors coming on board, we pool the funds and we are able to buy a commercial property, which gives our investor base the advantage of exposure to a commercial property, which otherwise they might not be able to get. When speaking to investors, the three currencies that most people have exposure to are typically the American dollar, the euro, and the British pound. It makes the most sense because these are the widest held investments by most people. However, what we saw during the global financial crisis is that even these three currencies were not as robust as many people thought they were. A lot of prudent investors therefore started to diversify further and added one or two other currencies to their portfolio. Two currencies that we saw being added a lot were the Canadian dollar and the Australian dollar. I think that it is prudent for every investor to not only have diversification by way of various asset classes, such as bonds, shares, property, etc., but to also have diversification across various currencies. As such, it made sense for us to add the Australian dollar to our portfolio. We continuously scout the market for what we deem are good opportunities in all the commercial asset classes. Once we find an opportunity that we think is worthwhile, we will put it under contract, do our due diligence, and if it passes all our due diligence, we will then acquire that property. Only at that moment in time do we start raising equity for the property that we are about to acquire. As such, there is no pressure on us to continuously buy properties because we are sitting on a large pile of cash that drags our performance. We are therefore in a luxury position that we only buy what we really wish to acquire. The typical investment horizon for our investments is 5 to 7 years. However, we obviously stay in touch with the market and we monitor this very, very closely. We have recently exited a number of our investments at a much earlier stage because the returns were such and our prices offered to us were such that we were able to achieve our investment objectives at a much earlier stage than we initially had anticipated. When that happens, we have no problems in exiting because at the end of the day, it's about the returns for our investors.